Alrighty, everybody. Welcome to the first episode of Clockwork Trades. Today, I'm going to be going over a trade recap that I took on Friday, September 26, 2025. This was a short position that I took, and I'm going to go ahead and break down the trade. So coming into the day, I had a mixed bias. I could have seen it either going down or going up, right? Coming on here on the daily time frame, we could see that price was pushing down the past few days. It pushed down on Tuesday, Wednesday, and Thursday. Monday, the week opened high, and the weekly candle pushed down. So I was really using the candle range theory. I was expecting previous day low here to be visited, which we didn't get. But also, I did have a bullish bias because we were delivering out of these bullish daily fair value gaps. So I could have seen it running for this external liquidity at these highs here, eventually out of these bullish fair value gaps. But however, on a Friday, you can either expect a TGIF or just a consolidation day, which is what we got today. It was a consolidation day. It just closed inside of the range of Thursday's candle. So with that being said, I'm going to add some lipstick to my chart. We're going to drop into the 1 hour time frame. So coming into the 1 hour time frame here, we have a lot of bullish S&Ps pre-market, right? Because in the replay mode, I'm not, I'm really presented with this data right here, okay? So at 8 a.m., this is what I'm presented with. I see huge S&Ps with ES. We have this S&P here that the Thursday low created with ES, right? And then we have this other S&P here that the London session of Friday morning created, where ES failed to take this Asia low during London, and NQ actually did take this Asia low during London right here. So we see that we have a lot of bullish S&Ps. On top of that, I pulled my Fibonacci retracement, which is right here, this blue line. I pulled this Fibonacci retracement of my daily range from Thursday, and we could see how much we have been respecting the equilibrium of this range at 608. And we had a news release at 8 a.m., which manipulated us outside of equilibrium and into our standard deviation levels, which I'm going to go over here shortly. So we manipulate out of equilibrium with the news event, okay? So we're still mixed bias here. I didn't like the way this 8 a.m. candle closed too much to the upside, especially with the standard deviations that we had here. So the standard deviations that we had here, I pulled my manipulation leg that formed the S&P. We see negative 2.5 here lining up with this negative 4 level almost to the tick, just 2 points off of each other. And you can see here, market opened up, right? We had that 8:30 news come out, the news release. We hit counter bias level of negative 2.5. We hit the full deviation of this buy model that was expected here, the negative 4 full deviation, and we already start turning around from here, okay? So this is telling me that we could be bearish. So I'm still skeptical about longs. I have one condition for longs, right? This is a big 5-minute fair value gap, a 15-minute fair value gap here. So my one condition for long was if we close above 719 on the 5-minute time frame, if I get a 5-minute candle that closes above this level, then I will take a long there into previous day high. And, the reason being is because this is also a 4-hour fair value gap, right? This is a 5-minute fair value gap within a 4-hour fair value gap. So if it really was going to close above this 5-minute, then I would have expected it to close above this 4-hour and continue going higher. But in this case, we really didn't get that. We really didn't get that. So playing the tape, we have market open here, right? The market opens up. We hit that standard deviation. We start trickling down. Market opens up. We immediately manipulate lower, generating this sell-side liquidity right here. Okay, we manipulate lower, we generate sell side. And then we just make this huge move up. So this is very sketchy, and now the market just starts to consolidate. It just consolidates. So in this case, I'm waiting until 10 a.m. before I take a trade when I'm seeing it chop up like this. I'm really not interested in taking a trade until like 9:45 at least. To get into position unless there's something super, super clear uh, I really wouldn't want to take a position. I would have taken a long here, possibly if there was a 90-minute cycle SMT, which we didn't get. If you're not familiar with time cycles, then I suggest you look into Zeus's content, but I do trade Zeus's time cycles paired with ICT concepts. So continuing with the explanation here, we open up, move lower, generate sell side, we consolidate, we chop up. We have the 10 a.m. open. 10 a.m. opens up, and we immediately open up and create an SMT with the S&P 500. Now, remember, as I said, you know, we have a time cycle SMT here. This is powerful. Okay, if you go on the 4-hour chart, you'll see that this 10 a.m. candle takes the 6 a.m. candle high, whereas NQ it doesn't. NQ is the weaker asset in this case. Okay, so S&P 500, we create SMT immediately at 10 a.m. So we edge previous day high. We create an internal SMT, and we have an external SMT with the YM because YM takes previous day high. So we have an external, internal SMT, bearish. We're inside of the premium of our range, right? The premium of the range is here, okay? The 50% here is at 608. You see how we generate that sell side liquidity right there by 608, like right below it, which then later gets taken out. So here, I'm looking, okay, SMT. We got that inversion fair value gap here. I missed this entry, okay. We deliver out of this 5-minute fair value gap, SMT. On the 5-minute time frame, we never closed the 5-minute candle above 719, so my longs are invalidated. So now I'm looking downwards. We inverse this gap, I missed it. We inverse the second smaller gap here. I wasn't too confident in that one. I missed that entry. But however, we do have this beautiful fair value gap resting here where this red line is. We have this beautiful fair value gap resting here that was used as support. And once ran through, I expect it to be used as either resistance or is this going to go straight through it and keep going down. So in reality, I entered my position right here on this candle. My stop loss is up here. I'm usually risking about like 500 on my trade. And then my take profit is down here where this low is. Okay. And then, I mean, really today's trade was just an easy trade, right? We run the tape. We start going down. Right here, I'm break even. I move my stop loss from here to break even, okay? After we take out this low. This low. That's my break-even point. I'm break-even here, and then really it was just a risk-free trade, beautiful trade, ran straight to take profit, done deal. Beautiful day. I caught about 78, 75 points in reality on the NASDAQ. It was awesome. I had very good emotions during the trade. I was reading the market. I was staying patient until 10 a.m. after I saw that crazy manipulation at 9:30. We had a really good bias for both ways. We had a plan for both ways, but because we opened up, we take out the premium first, right? Premium is already taken out with the news. We manipulate down, generate more sell side, right? Come up again, we create SMT, deliver out of a 5-minute fair value gap, inversion fair value gap, boom. Everything was lining up beautifully today, and today was just a very reactive day trading. Just a beautiful trade altogether, and I'll show you my stats on Top Step. I've only taken 3 trades on this combine. I've had 1 loss and 2 winning trades. Here's my calendar. So far, I'm up 1750 for the week, just about. God willing, I pass this eval next week, and we get onto the Express account, and I will continue the trade recaps on the YouTube channel. But thank you guys for watching this video. Please like, comment, and subscribe. Any other support that I get, I really do appreciate it. The quality of this video may not be the best, but I hope that you guys could get something out of this, and please ask me questions. I'll be more than happy to answer them. Thank you, and have a blessed day.